I've been asked to share some experience with you guys about the common things that we see with startups that are specific for startups in Southeastern Europe. I mean, I don't want to talk about mistakes, but this is like patterns of behavior and some common understanding that sometimes needs to be needs to change a bit. And I'm here to share a few thoughts about how should you talk to investors and how entrepreneurs in general in Eastern Europe should talk to investors, because one big pain point that we have here in the region is that we have a very strong technical skills, and we have a lot of developers. This is valid for Ukraine, but also for Bulgaria and for Romania, for those countries in this neighborhood. We're really strong on that, but we have other things to catch up. So maybe with a few points here, I'll be happy to share my insights. So I've been already introduced. So we're a 9 million seed VC fund. We're based in Sofia, Bulgaria, and we invest in the entire region. We did a few investments outside Bulgaria already. We have around 40 companies that are alive, 53 investments in total, so all the things that I'm gonna talk about are more or less through our perspective. So I'm not saying that this is every VC would think like that, but this is like our point of view. So we got already around 6 million invested from our first fund. We're already raising our next fund for next year, and the success stories. It's pretty early to talk about success stories when you're an early stage VC and a new kid on the block. But we measure our success stories with the attracted follow-up investments. So we have around 9 million already invested in follow-up rounds in our portfolio companies, and this is going to be growing this year, I hope, pretty significantly. So we invest between 100K and 500K. So typically our tickets are between 100 and 200K euros, and we invest up to 500,000 together with co-investing together with some other VCs from the region. So the first tip that I have for startups and entrepreneurs is just when you start growing your business and you start thinking, how should I go global? The first question that you have to ask yourself is actually, do you really need a VC? I met a lot of entrepreneurs and a lot of startups that already have a relatively good business. They're like into their lifestyle business kind of thing, and they're already profitable and they're good. And sometimes they're pushed by the common understanding that they should talk to investors, but actually sometimes they don't need investors, because there are some types of entrepreneurs that don't really want somebody else to get into their business and to tell them what to do. So this is a very general tip, but a first question to ask: do you really need a VC? Then another tip, I see this very often in the region, is do I have a startup or have a project? This is common for our region because of the technology background of the region, and we have a lot of those software development companies, and a lot of those guys spend some free time for their developers to start working on some ideas, some projects. But what investors want is typically a startup, not a project within another big development company. And this is a common problem that we see. People come to us and say, "Oh, we have this project, and can we invest in?" And okay, so what do you do the rest of your time? I mean, oh, I have this business of outsourcing. I have hundreds of developers, and I'm doing projects for the States or for London, etc., etc. So this is not really good. So if you decide to really push this project further, don't call it project anymore, and really call it a startup and do a proper spin-off. And when you do a spin-off, this typically means that at least one of the founders of the previous software development company will quit this boring outsourcing job and will fully concentrate on the startup. And this is, I have an example for that portfolio company of ours, one of the best ones in the portfolio. Historically, the CEO was CEO of a relatively, big, or maybe not in your eyes so big, around 200 developers, but relatively big for Bulgaria software company. And at the end, he realized that if he really wants this startup to fly and to take away, he had to quit the other job and fully focus on the startup. And today, he's even based in the Valley, and the R&D team is in Sofia. What's the next one? Build a strong and complementary team. This is also very, very important tip, because a lot of startups that come to us are not really fully packaged yet in terms of team, and we tell them, okay, it's interesting, your idea is interesting, but who's going to sell it, or who's going to do your marketing? And we see quite often teams, okay, so I'm the developer and I have the backend guy as a co-founder and a front-end guy, and I'm the CTO and the CEO. Okay, this is good, but it's once again, talent and knowledge focused around technology. But startups, it's not only technology. Startups is also how to sell, how to market, how to think, having a strategy, go-to-market strategy, etc. Another tip for entrepreneurs is not to show up in front of an investor as a sole founder. We see this quite often. I mean, probably you read this across the internet and everything. It's not news, but we still see a lot of people coming to us and say, yeah, I have this amazing idea, and I already worked on it over the weekends, and here is my prototype, and I even have a closed beta, and 200 people on my beta, and 10,000 people on my waiting list, but I'm alone. So, wrong checkbox, no. We just did an investment like that, but we kind of, because we really liked the project, we forced the guy, while we were signing the term sheet in the papers, to build up a team and to give some shares to a few other people. And one more tip about leadership. This is also lessons learned from one of our portfolio companies. It's a great company with a great technology, and the CEO is actually a very, very good developer. They do some very, very complicated and sophisticated image recognition stuff. But this startup in our portfolio is a good example of a lack of a strong leadership, because the guy is just not a good leader. He's too much democracy in a startup kills the startup. So everybody there has like their own opinion, and they discuss, and they have like endless meetings, or what should we do and how should we move further, etc. I mean, in a startup you don't have a democracy. You have more like a strong leader that pushes and engages the other team members. And once again, I just mentioned this a few minutes ago, but it's really, really important. It's 80% of a successful startup is the sales skills. So you might be like, you can build an amazing technology. It could be like, yeah, wow, that's so cool. Nobody else can do that. But if you cannot sell this, and we even have a bigger problem when it comes to B2B companies. It's even more important. I have one great startup in the portfolio. They're really, really amazing in terms of the technology that they're building, and they're suffering for the last 6 months to close their first deal, and they're running out of money, and the clock is ticking, and everybody's nervous. And I mean, at the end, they're not going to be able to fundraise their next round if they don't have at least a few flagship customers. That's obvious. This is about the MBAs. A lot of people are saying, yeah, how should I build my career? Okay, I will do an MBA, and then I'll start my startup. We invested in one MBA startup. For the moment, those guys are too academic and not really. I'm not really sure how far those guys were going to go. And maybe it was very, very modern 10 or 20 years ago to do an MBA, but nowadays the MBAs are a bit outdated. You know, the best actually learnings, it's just, you know, get your hands dirty, or, you know, start and go into the fight and learn stuff there. Sorry, I don't. Okay, greedy founders, another problem. A lot of the people that we meet are very, very greedy in terms of giving away shares. They start already negotiate with us. Okay, it's like, oh, you want to take 15% of my company? That's too much. I was thinking that I'm going to give you like 5 or something like that. So don't be greedy. Also, not. I mean, in terms of investors, of course, you should negotiate, because the investors always try to fuck you. That's for sure. But you know, in terms of your co-founders, your team, you know, don't be greedy. That's a bad sign. Better to have you know, 20% of something that will value something rather than 90% of nothing. But also, don't give too much. This is another problem that we're having, because we're kind of a new ecosystem in terms like startups and investments and all those kind of things. You know, really didn't exist in Bulgaria 2 years ago. Nobody knew what is an investment in a startup, in a digital startup. Well, maybe not nobody, but like very few people. So we saw already a lot of companies that managed somehow to attract somebody else's money, like angel money. That's awesome. For me, it's a good sign. The guy's a hustler, managed to convince somebody to give his own personal money to invest in a startup. But typically, those angels, they have also some kind of a wrong understanding about, you know, the percentage that they should take. We had, for example, a portfolio company where for a very, very small investment in Romania, the guy took 30% of the company. I think it was like 20K euros or something like that. So when they came to us, we said, okay, we like your startup, we like your idea, but this guy here is just, you know, he screwed you. You cannot really fundraise further because, you know, the mathematics doesn't work anymore for anybody. So the guy went back to the angel and renegotiated, and the angel was, you know, happy to lower his percentage of equity in the company. Build an advisory board. This is also very, very important, and I don't see that many people doing it. An advisory board is typically people that you should somehow, through the network and through your connections, engage and use their brain and their door-opening opportunities and their know-how in a way that, you know, this will really help your startup to move further. It's not an easy task, so first you need to find those people, and then you need to engage them. And typically those people are relatively or very, very busy. They don't have time for like a chit chat every 2-3 weeks. Like, okay, can we do a Skype? And then you start asking some dumb questions. So, you know, those guys are hard to find, and then in entrepreneurs should really try to maintain a relationship, like test how the relationship goes. And eventually, if both sides are happy, at one moment the entrepreneur says, okay, you know, I really like working with you. I would like to invite you to be advisor in my advisory board. Typically, this goes also with some vesting scheme of like giving some, you know, a percentage or 1.5% vested in a few years for such an advisor. Don't give too much percent to advisors too. This is also a startup in our portfolio who did this mistake in the early days, and now those guys, you know, have you know, too much equity compared to, you know, the value that they have contributed. So the previous speaker said that you know, startups from this region are able to fundraise in the valley. Maybe there are some exceptions, but it's really, really hard. So I see a lot of people that are telling me, okay, you know, fuck you, you're like a small, tiny, shitty fund in Bulgaria, nobody cares about you. I'm gonna go to the valley, I'm gonna fundraise there. But it's not that easy. If you're not based there, or if you haven't been with some kind of a track record, like a successful entrepreneur with a previous exit, or you did Stanford or something, going to those guys, the big VC guys in the States, they already have so much deal flow, so they already meet so many people. So you arrive there like, hi, I'm like, we're a bunch of guys from Bulgaria, and we want to fundraise here. It's like, with some exceptions, but people don't really, they might accept a meeting for the conversation. Sometimes they don't even accept. But doing an investment, and we saw this with one of our portfolio champs. The guys really had good traction. They had 20 million downloads of their mobile app, and it's innovative technology and everything. And they went to all the meetings. They met all the big VCs, and at the end, all the guys said, "Okay, why don't you settle first here an office, and the founders should come here." And in the meantime, just get some money from a European VC, and that's what the guys did. Research and find the right investors for you. I see a lot of people going to investors just because the guy's an investor, and this is not good. Most of the time there is not fit. Like investors have ticket size, investors have geographies that they invest in, investors have verticals, business verticals. So do your homework before talking to somebody. Just go and research and say, okay, I'm in a marketplace. I want to raise 1 million. So who should be in Europe the best one? Point 9 Capital in Berlin. Yeah, okay. So this is something that everybody should be doing. Beware of zombies. This is very, very important because we're like a new market. There are also, we're kind of the golden rush market, the El Dorado of entrepreneurs. And also, when you had the golden rush in California, you had a lot of people that were actually there not to win their money with a decent work, but like try to steal other people's money. So zombies are typically VCs that pretend they're VCs, but they don't have money. And it's a waste of time for everybody, just even to talk to those guys. So when you meet somebody, make sure that this guy has a real fund, that this guy has money in the bank, and that this guy did some investments. Talk to some startups that he already invested in. This is the best way to double check this. Select carefully startup pitching events. There are so many events, and they're growing exponentially. How much time do I have? I need to. Okay. So very, very quickly. Now, startups go to gazillion pitching events, and they think they're going to find their investor there. It doesn't really work that often. Of course, there are a few ones, very good ones, but there are many others where actually it's just a conference. The guy is just in a conference business. He's not in the matchmaking business, in the clever matchmaking. He's in the conference business. I'm throwing this big conference. I'll have all those investors, and you can have a free booth. But by the way, you have to pay 900 euros. And then you go and you get your booth, and you discover that actually there is no traffic, and you see 0 investors for the 2 days you spend there. So be careful about that. Build a relationship. It doesn't happen from day one. When you meet somebody, usually they'll start like thinking, is this a good idea or not? What should I do? The investor starts talking to other people, starts researching eventually the company, the space, asks his network around for the opportunity. And the best way to actually build a relationship is talk to investors not only about money, or even don't talk about money at all. Start with like, I would need your advice, or can you connect me with this or that person? I would like to talk to your portfolio companies, Lambda, because they're in the same space as me. This is sometimes takes months and months before actually the investor will at the end say, oh, actually those guys are good. I should put some money there before somebody else comes and steals them from me. And one more hint: no means not now. So you should never get disappointed. It's like, oh, everybody told me no, so what should I do? Maybe I'm not good, etc. No from an investor means not now. So maybe in a year, you can come back, knock on the door. Oh, dude, by the way, we have this growth, and we already had like another investment, and we're closing a new round. Do you want to get in? So this is something that, you know, never think of like somebody told you no, so I should never talk to him again. And the speed of execution is my last tip. This is also very, very important for the region. People here believe that, you know, we're fast, but we're not. Compared to American startups, for example, I will give you a very quick example. The portfolio company I mentioned that is in the States right now, they're based in Tim Draper's premises in the Valley. And, you know, they were working every day hard, and they had some other American teams around them. And at one moment, we were having a Skype call, and they said, "Oh, by the way, those Americans, they don't really work that hard. I mean, at 6 o'clock, everybody's gone." And one day, the founder actually forgot something and had to come back for his laptop or something at 10 or 11 o'clock in the evening. And he comes back and he sees all those teams are back in the offices and working hard. Then actually he realized that, you know, at 6 o'clock they were just out, you know, to take their, you know, to make their shopping, or to have a meeting and a coffee, or to have their lunch with their mom, dinner with their mom. But then they're back in the office and continue to work. So I will finish my presentation with one of my favorite quotes. It's not the size of the dog in the fight, it's about the fight in the dog, by Mark Twain. So I don't think we have time for questions, but and the other thing is that I gotta run in a few minutes to the airport to catch my flight back. But please, you know, connect with me on LinkedIn or follow me on Twitter. I mean, I'll be happy to answer to any questions on Twitter or any other way. Thanks.